Amazon and Meta set to report results after the bell today. Joining us now with what investors can expect from the two tech giants, Brad Erickson, RBC Internet Services Senior Analyst. Brad, great to have you with us. I feel like we've learned a lot so far from the big cap tech stocks that have reported. Obviously, we've learned that good is not good enough. They've really got to blow it through the doors. But also that there might be some issues with ad spending. Cloud growth is okay. How do you impute what we've learned to the reports that we're expecting tonight?
Yeah, I would say we've learned something, but not everything. Google doesn't talk about Q1, so we haven't really heard a whole lot there, other than Microsoft on the cloud side of the business. Yeah, on the advertising business, I think it's a case of high expectations. Our checks were very, very strong through the quarter. I think a lot of investors were as well. So it's kind of one of those cases of everything is awesome, but everyone knows it. I think for Meta in particular, it's interesting. I think it's all about Mark Zuckerberg's performance on the conference call, talking about AI, what capabilities those can actually drive for revenue, maybe even as early as 2024. And then, of course, how much they're going to spend. So I think there's actually some other wild cards that will play in more than the strong fundamentals that everybody seems to be expecting.
Pre-year of efficiency, Meta had always been scrutinized for how much it spent. Are we going to enter that cycle now? We're in the conference call. The quarter looks great in the conference call. They say something about CapEx that's just more than expected, and we drop. I mean, is that sort of the potential tape bomb that you see?
To some degree, yeah. Yeah, that's a huge driver, and it's definitely a huge kind of trigger point as how investors sell the quarter or buy the quarter, I would say. Back to kind of my earlier point, right? The CEO of Meta, he at times has sounded quite aggressive on spending, and then other times he sounded, sort of really prudent on spending. That's kind of the spectrum that investors look for, and we'll see what we get tonight.
For Amazon, last night I was watching Amazon, and they were asking me if I wanted to upgrade $2.99 to watch ad-free. How do you think that's going in terms of uptake, and will we get some color on that? Is that going to be a big thing for this quarter?
Yeah. First up, what'd you do?
I upgraded it. mainly because I'm a cheapskate and I probably would suffer through the ads, but I don't want my children to be subject to ads.
Yeah. I mean, it's going to be a mixed bag. We've run the numbers, and just getting to the revenue contribution, because that's what everybody's really after. We think it could be somewhere in the neighborhood of $3 to $4 billion annually at a very high operating profit. But yeah, it's going to come down to how much do people really value Prime Video, obviously, relative to the utility that they get out of Prime. We think a huge portion of those users are gonna pay up for it.
Brad, one of the maybe upsides of the choppy response to some of these results is that this group starts to trade not as one big blob of Mag 7. I mean, maybe that started a while ago with Apple and Tesla falling away. But do your clients think of them as a group, or is it kind of name by name?
Oh, it's definitely name by name, I would say at this point. I happen to cover 3 of them, so I can't speak to all of them. But like, just as an example, right, the other night, Google's ad numbers were incredibly strong, all things considered. But again, that kind of playing that expectations game. I think in Google's case, though, when you're raising CapEx as much as they are, and it's around generative AI, you're not beating search estimates, and everybody's nervous that generative AI may have an impact on search, right? You have a very company-specific bear case. We called it out as kind of building. This was actually one of our concerns in 2024. As we laid out the year. That's a very Google-specific issue, right? With Meta, just as another example, AI probably works much more as a tailwind and something that people are more optimistic and kind of biased to the upside on. So, yeah, definitely company to company.